Wells only and his guests are not responsible for any losses you may accrue for having weak hands. Where the haters at? Yeah, bitches still ain't showed up. And now, right, we got Hex, flawless uptime. People thought this was a joke. Now they're mad at the chart. This is Whales Only. Glad you guys can make it out. I'm making some claims that are pretty outlandish, but I can back them up. Boom. End of story. There is no other crypto out there, so don't get it twisted. If you don't understand where you're parking your money, you're going to pay the consequences for that. And that's just how the cookie crumbles. Boom. We're obliterating everybody. Literally. There is nobody else that comes close to what Hex has done. Right? The reality is that I want to be rich as fuck. There's only one way to be rich as fuck. That's by sitting on your ass the longest. Yep. That's it. Yep. That's the secret. The guy well told you. Richard done told you. I done told you. Kareem done told you. Maddie done told you. Everybody done told you. Everybody done told you. Shit, motherfuckers still acting like they don't know. Appreciate that.
Yeah.
I appreciate that.
100% safe. There's plenty of games left.
Valiant done told you. Yo, everybody said it. I mean, hey, you know what it is, man? Everybody done told you. Y'all's deep. Everybody. My God. Hex agents, bro. Everybody. Australians, man. Everybody gets me. Yo, when is it told you? Dollar cost told you. Everybody done told you. It's crazy. Hey, happy Father's Day to all the fathers out there that are actually fathering. You know, it's easy to be called one, but are you actually one? That is always the question. All BS aside, shout out to all the dads out there. It's no respect for them because society is structured that way. So it is what it is. So keep your head up and just make sure if you got kids, you got a good one with you. Because if not, hell to pay. On an up note, it is Father's Day after all. So do be mindful of those persons that you look up to as a father of sorts and show them respect. It's only right. So shout out to everybody in the chat. Thank you guys for tuning in. As I told you guys before, I'm gonna fall back from Twitter and pretty much all social media because it's really a waste. And I'm just gonna be engaging mostly through streams and articles when I post them and shit like that. So you guys got questions, just save them for when I come up or whatever, because I'm not gonna really be doing a lot of that hoopla on Twitter. I'll be watching, but I'm not gonna be talking. So just what's up to everybody? Thank you guys for joining. It's been an interesting week. Things have been shaken out as expected. What you're gonna do. First check is, how is your cash flow situation doing, right? Now I don't know what you're talking about. And it's like you got to really focus on what matters, right? And for all of you guys that are out here and ladies that are trying to get out of the rat race, step number one is checking your expenses, right? We talked about this a couple of streams back. Assessing your liabilities, right? Expenses. That's important stuff, because moving forward, things are gonna get wild out there, and having your game tight is gonna be pretty important. Yeah, man. Started already. watch my last stream, break it down. Yeah, happy Father's Day to all the pops in the chat for sure. Cheers to all. And these are the kinds of things that you got to be paying attention to because it matters, right? I mean, everybody likes to say, "Oh, well, I focus on what's important," blah blah blah. But here you are walking around in the red, not quite adding up, right? And here's the thing: we all do it at some point in time, right? And it's about respecting yourself to get to the point where you realize that you are playing yourself because you're not trying to be broke. Nobody wants to actually be broke, right? I don't think anybody chooses that. It kind of just happens, and it happens by you making piss poor decisions. And, that's part of life. But how do you get out of that sand pit? What up, Johnny? How do you get out of that? You got to focus. You got to realize what the hell is going on. What are you doing? What are you spending your money on? Does it make sense? Right? I mean, I had to do it. We all got to do it at some point when our pockets ain't shaking out right. And if it's just luck of the draw, well, then fuck. It's just luck of the draw. It is what it is. And that's just how it goes. You got to really take reality by the balls. Don't be shy because the world isn't going to be shy back. That's a fact. Thank you for the super sticker, brother. Appreciate that. Shout out to you, my man. I see you on Twitter doing your thing, bro. Out there running around and all that. What up, crypto gains? Ah, yeah, let's talk about that joke. Oh my god. Ugh. All right. So, pros and cons of this thing. Pros is publicity. There's really no cons to that. Even though everything in that article was factually incorrect in regards to Hex. I don't really remember anything else that they were talking about, but just all the points in regards to Hex were just all wrong. Just wrong. And this is something I figured out when I first started learning the game. Because what's the first thing a noob does when they have no clue about anything? They go watch financial news and think that that's actually news of some sort, right? And then they find out, whoops, that was a lie. Shit. Because it costs some money, right? So, whatever's in that article will work on certain kind of people. Are those the kind of people we want here? Maybe, maybe not. It could be that some of those folks do get their head straight, and realize what's important and what's not. But sometimes that takes time. And this is why I don't really talk about anything else. What do we need to talk about TA for? How good has that done you lately? We talk about the real world for a reason. That's how you analyze markets. Not on a fucking chart. Period. You give a fuck who you are. That's a fact. I don't see anybody out there celebrating like we are. So how about that? Yeah, how about that one? Shout out to everybody in the chat again. I'm falling real behind on this because I stopped on that one. What up, Tap? What up, Godfather? Yeah, that's not why I'm leaving. Honestly, it's just a waste, right? I was on there to serve a purpose. I think at this point in time, I've served my purpose on Twitter. Whoever wants to be educated will continue to be educated. I've showed everybody how shit works. I don't need to keep showing you. You can figure it out. And that's why I don't really need to be on Twitter no more. More than anything else. At first, it was to learn about Hex. Then it evolved into me trying to help others learn and understand what was going on out there. And if you don't get it by now, well, shit. Ain't much I can do for you. So I'm tapping out. I'm good. I don't need Twitter. And Twitter doesn't need me. So moving on. Nah, I don't even know what that is, bro. Yeah, y'all go ahead and do that. Smash them likes. Yeah. Oh, we'll see what that's all about. It's a good movie. It's a good movie. We'll keep watching. Uh, yeah, aren't we all, right? Aren't we all? What up? What up? Hot, hot. Thanks for coming in, brother. Appreciate you. Yeah. So that article, right? So that Bloomberg article is just one of the many things I've tried to teach you guys over the past 18 months. You're not gonna get anything valuable from a mainstream source. Period. It's just not gonna happen. And this is why you need to learn how the real world works, because you are going to constantly be at an information deficit. And this is my secret to success, FYI. How is it that Wales always figures all this shit out? Because I don't know anything. And I know I don't know anything. Yeah, that's something they're going to pay attention to. I interviewed there one time. As I was interviewing there, I realized what kind of place it was. I didn't know, to be honest, at that point, because I really had stopped paying attention to it for so long up at that point in time. And I'll tell you guys what, I walked in there and I interviewed, and to make you go through your rounds and all that Wall Street crap. And boy, am I glad I failed that on purpose, because that shit is a setup. So yeah, they're gonna pay attention to this, right? Because they're the opposite of smart. They're attention media whores. So they're gonna use this to their benefit because that's how it works. Why do you think they print money? It's not because it's not something to do. It's because it's something to do for them, right? And this is why crypto is a thing. And this is why you need to read that thumbnail I made today and study that. Because this is exactly why we're going through this whole scenario right now. I broke it down in my last stream, right? You gotta really keep in touch with what's actually going on. You want to be successful? You're gonna think you're gonna rely on other people's information? Eh, not the way it works. Not the way it works. Thank you, Saya. Hope you guys are doing good out there. So yeah, I've showed you guys plain as day how easy this is. It's no ego, no arrogance, no none of that. Simple, straight filtering of information. It's what I do, and I do it well. So this is what you have to work on, because your environment is not mine. What I see can't be what you see. So you have your own unique value to add in reality. You see? And this is the kind of thing that I think is really, really important to understand, because we all have our own mind, our own way of seeing things, our own way of perceiving reality. And while we have to learn from each other, it's important to also figure out what it is that you actually know, because that's the only way you're going to figure it out. I honestly don't believe anybody that watches any of these streams wants to make a decision based on somebody else's thought process, no matter how good it might be. I think everybody wants to be able to grasp the information themselves so that they can be the ones that make that decision themselves. Right? Now, this is actually a pretty good comment. I don't personally volunteer per se. I have. But what I do like to do is I do go out of my way to help people in need when they need it, in person, like in real life type shit. So that's what I do. I don't need to be bragging and flexing. I just need to, people need people to show up in real life. That's what people need out here, especially where I live. People really need that. I mean, I don't know what happened across from where I live, but cops pulled up and everything, big old brawl and all that. And it just happened out of nowhere, one moment to the next. And that's real life. And in real life, people need people. We're not out in this world by ourselves. And that's something that I learned in 2020 because that was hard for everybody, no matter you a loner or not. Because even loners, as I thought I was, because I am a loner to certain aspects, but 2020 was different. You couldn't leave your house because even though you did, where were you gonna go? Who were you gonna interact with? Who? Yourself? It nobody. I was out there running miles on end, man. I was out there running damn near half marathons. I was so bored. That's how crazy 2020 was. You know what I mean? Like that really happened. That we collectively as a society decided to take note from some clowns. I mean, this is gonna go down in history like nothing else. If y'all thought slavery as we know it was bad, wait till this shit goes in the books. This was the whole world, not just one class of people, one group of people. Oh man, y'all don't got a clue. Human, I mean, if this species of human even survives, I mean, our children's children are gonna look back on us with disgust and disdain, straight up. Assuming we even get out of this because we're clearly not out of it all the way just yet. Still got to play out the rest of the hands, right? But we clearly have won because the things that they're doing, as you guys have probably noted, are so out of whack that they don't even make any sense. I mean, they're out here pulling kids into. I mean, they got drag queens going into kids' schools. They got trans people going into kids' schools. They got all this crazy stuff going into kids' schools. And I'm not talking about high school. I'm talking about children. I'm talking about preteen children here. Like, wow. And, parents are stepping up finally. About time. I mean, maybe not all the way in Cali, but out here, I know they are. Oh, yeah. So it's going to get real interesting because what's happening, yeah, this is definitely strictly public school, of course. Definitely not private schools. As far as I know, definitely not any private schools. I mean, I'd be remiss to see something like that go on in a private school. That'd be wild. I mean, you would have to see people pay for that. You know what I mean? Like, that would be insane. Um, so, this is really happening, right? And so, what does this mean? This means that they're at the end of the line. You might be asking yourself, how do I know this? Well, I just look back at their past actions. What have they done in the past? Well, if you think about how we got here, it took us inch by inch by inch by inch to get here. And people were not seeing it. And hell, some people still aren't seeing it. Okay? Now, what they're doing at this point is that they're literally going 100 miles an hour because they have no choice. Important to understand that. They have no choice at this point but to follow through with their intentions 100%, no questions asked. Now, what does this mean? That's what you might be asking. What the hell does this mean? Well, let me tell you. What this means is that it's on you to stop these fools now. Because guess what? They have no other choice because if they stop, then it's complete admission of omission of all types of information, all types of rights and freedoms. I mean, they're literally saying, yeah, we're ready for Nuremberg 2.0. So they're not going to stop. You guys got to understand that. That's why it's on you to stop them, because nobody else is going to stop them. Government is there to be checked, not to check us. It's important you understand that. You need to go read your Bill of Rights. You need to understand what they are. Very important. Because what comes next might not be something you can contend with just by trying to get another job or something. You really don't know what's coming next because you are relying on other people to give you information. So you're at an information deficit squared compared to me. I at least seek information. Most people do not. And I mean information to the point that they're making their own assessment. Okay? Not listening to me and saying, yeah, I agree with Wells. He right all the time. No, no, no. What do you see? What do you understand? Because that's important. Just as important as what I see, as what anybody else sees. It is. Whether you want to admit it or not. Because you see things how you see them. Not how I see them. I don't have your point of view. I can't be just right. It's not possible. I always miss something. I'm human on occasion. This is important. How do you achieve success? This is why we're here. It's cool to talk about gains and all that, but if you don't understand how to keep them, what good are those gains? Yeah, you're right about that one. Yo, you know what's funny? I be getting the dumbest comments about me being high all the time. But I'm like, yo, are you not paying attention to the stream? Because, bitch, I'm right all the time. The fuck is wrong with you? Oh, man. I mean, every stream is literally like an LP or an EP. I don't prepare for nothing. I just do these things. And people still have the goal to think they can check me. It's hilarious. Hilarious. And here, this isn't me gassing my own ego up. This is the facts. Just watch the past 130 something streams. You don't got to take my word for it. It is what it is. So respect the receipts. Peace. People just funny, man. People just funny. Like, why you mad, bro? Just get better. That's what I had to do. That's what I had to do. Yeah. That's probably the funniest comment I've ever gotten. Ah, shit. That was funny, man. God damn. Woo. Man. Man, I got this theory. I see somebody talking about church. I got this theory that churches are like batteries or something because they don't make sense as buildings. I'm sorry. They just don't. They don't make no sense as buildings. Like, I get house of worship, temple, yada, yada, yada. But nah. All of that is something else, man. I don't know, but something else going on with that. Like, just the whole way it's set up. I don't know. I'm just not convinced. But you guys know how I am. So, whatever. Since I now have 150 people in the chat, once again, happy Father's Day to all. And much respect to those that do the fathering. Because we all knuckleheads out here. So we know it ain't easy. Right? We know it ain't easy. We know it ain't easy. So let's all show some respect to the dads out there. It's definitely not easy. Oh, what the hell is that? Fucking fly. All right. So back to the topic at hand. Everything is crumbling by design. Okay? You see it in the headlines. I broke it down last stream. Please go watch it. It was a nice 40-minute stream. I went out of my way to make that one quick. Please. Watch it. Because that joint is the one. That one is the inflection point. It only had to be 40 minutes. Because I literally covered everything that you need to know right now to find success on the other side of this mess. Now, from now until then, you have to learn how to manage your funds, right? Because we don't know what's coming. But you got to play both sides of the line because you can't be on one side. You got to play both sides because you don't know what's coming. Now, we know the dollar's phasing out, the reserve dollar. We know that's phasing out for sure. But here's the thing. Now, I'm sorry I'm not properly prepared for this, but I really should be properly prepared for this. Um, the Federal Reserve is kind of being lined up to be audited. And as crazy as that sounds, I think it might happen this time. Now, why do I think that? This is what's interesting. Why do I think it's possible this time? Well, the dollar is failing. Well, excuse me, the dollar has failed. Now, what has to happen is that the public needs to catch up to that. This is a funny comment. Sorry, I had to cough on that one. That was a good one, bro. There do be some cats out there, you're like, whoa, because it's crazy. Oh, man. But yeah, uh, you got to learn how to straddle both sides until then, because now here's something you might not know. That's actually pretty bullish if you're in a shitty situation financially. If everything does crack to the point that the system does a reset and all contracts do become null and void, anybody with a debt, they get off scot-free automatically. Period. Even if they try to come and collect, they have no basis upon which to collect because you owe them Federal Reserve notes. Unless they institute some type of legality in there that could magically surprise us, completely possible. But fact of the matter is, Federal Reserve notes are done, so they're gonna have to figure it out. Until then, this is true. All debts, all contracts become null and void. Because what are you paying them with? Thin air. I don't think that's what was agreed upon. So it's pretty much a self-happening situation. That's a self-destructive property of a contract that nobody really talks about. So yeah, something you should know. But however, that doesn't mean go run up your damn credit card like some fool, because that's not what I'm saying. I'm saying understand the rules of the game and play it right. That's what I'm saying. That's what I always say. So get it right. Now, excuse me. Um, you have to learn how to manage your expenses. This is really the most important thing. If your cash flow isn't to the point where you can just be blowing money on dinners and stuff like that, like you just should not be doing that, right? Pretty straightforward, yes. Some people do not do that, so you should probably do that. Yeah, bro, that's literally how the system works, because the system is designed to work how it works. The system we're under now fucks you because it's designed to fuck you. It's not designed to be fair. So your presumption is based upon the fact that you think this system is staying in place. And that's what I just said is not happening. So, no. Understand how contracts work. That's number one and very important, especially if you're an adult. Because guess what? 99.99% of us are in contracts that are null and void, and we don't even know it. Chew on that one. Moving on. And FYI, that includes myself, but I do know. So, yeah, clearly not including myself in that 99.99 bucket. What am I going to do about it? No idea yet. I'll let you know when I figure it out. But if I was you, I wouldn't wait on me because I got other priorities, and that really isn't one of them. because I'm not really under a ton of contracts and stuff like you guys or whoever might fall into that bucket. So something for you to consider. Oh, good question. Well, I already kind of told you guys what's going to happen in real estate a while ago, but since we're here now and it's a question now, it's basically going to crack, right? Supply is increasing, it is not decreasing. Now, what's important to understand is that you have people moving away from major urban areas into major, smaller urban, areas and suburban areas. Okay. Now, what does this mean? Well, it doesn't mean a lot. And why is that? Well, the reason that is because the cost of acquiring anything, everything, whatever have you, and let's just talk about mortgages for a second, that's gone up over 100%. Okay. The mortgage rates have gone up over 100%. Let's look that up. Because this is something people got to understand. Right? I mean, it's all about the cost of capital. It's not about anything else. It's not. It's not about the chart. It's not about the price. It's not about any of that. Period. It's just not. It's just not. And it's important you really understand that because that makes all the difference. Why do you think all these people are out there getting wrecked and we're having a party? Understand the difference. They are the ones doing the paying or not getting paid. Yes, not getting paid. This is what happens when things go bad, folks, and you own real estate. Yeah, this is what happens. You do not get paid because people cannot afford to pay you. That's a reality in real estate, in case you did not know. Yes, yes. Very important to understand that, guys, because that is critical. We do not have to worry about that whatsoever. You guys don't really, I mean, whoever is not staked does not get that. And that's why they're failing. And that's why they fail. Period. Not my opinion. It's literally a fact. It's literally a fact. Look around. It is just a fact. Okay? So these are the kinds of things you got to keep in mind because this is how you call these markets. Everybody wants to know how to call these markets. Nobody wants to rely on somebody else. Yeah, some people are lazy, but I'm not talking about them. They don't matter. I'm talking about you. You're the one watching this stream. You clearly want to learn something. So that's what we're talking about. Let's see over here. All right. Let me get this stuff out the way. These bad boys up. Where are you? Here we go. All right. Share. Man, I'm blessed right now. All right. Let's do this. Now, how do you understand that things are bad in a financial system that relies on the equivalent of what the street would call free base or heroin? Because it's that addictive. And guess what? The banks don't give up. They do what they want. And they get away with it. Because that's what the system is designed for. Literally. It's their system, guys. I've done streams on how central banks work and how the whole banking system works. One of my first few streams, in fact. How the Western economy works might be that one, or maybe I did one on strictly central banks. I can't remember. But you guys really need to go look at that, because I can't run over that information every time I explain something specific. That wouldn't be fair to the people that know. And that's very basic information if you're watching the stream. So that's something that you should go ahead and learn for your benefit, because it's about becoming a monster. You don't want to rely on monsters. You want to be a monster. That's what it's about. Now, we're going to first look at rates up until 1990. Let's do that. Now, this is from 1971. Okay. April 2nd, 1971 is the first date we have here. Now, what happened in the year 1971? I did a stream on it on the 50th anniversary because it was that important. And it was literally the loss of the gold backed dollar, i.e., the actual US dollar. That's what happened on that day. And that was August 15th, 1971, for those that are not familiar with that episode, because it's important. Now, at that point in time, interest rates in terms of the exchange rates for currencies were fixed. What happened at that point in time is that they became unfixed. They became floating. That's what that's called, a floating exchange rate versus a fixed exchange rate. Now, this is very critical to understand, because those are the rates that move the world. Those markets trend for years. People retire in those markets if they play them right and they have the ability to get the leverage. In the US, you can't do more than 50 to 1, so that's all you got. Feel like outside the US, I think you can get up to 400 to 1. So good luck if that's you. But this is important to understand, because the flow of the currency is what determines the yield all across the board. Because what's happening? Well, at the very lowest level of these markets, you're literally swapping fiat, right, in that local currency. You're swapping that local currency for that local US government, for that local government bond. That's what's happening, because that's how these markets are designed to work across the world. So you have the local currency underlying these local interest rates. Okay? That's how it works. Okay? Now, I see a good question here in the chat that I just caught. And I'm gonna answer it. Just please hold it. Let me just see. I think somebody else said something else that was good. I just don't want to let you guys slip here. I appreciate that, brother. I try not to share my opinion, but I guess it does slip from time to time, doesn't it? Let's see. Oof, nasty. Yeah, my man here works in real estate, so he's seeing it firsthand. I had a client have one of his properties taken from him. They gave him what they thought the property was worth, and he had to be happy about it. Oh, sorry guys, I basically live in a canyon, so that's what it sounds like. Now, I got a question for you. However, who took his property? Was it the government through eminent domain, or escheat domain? I can't remember exactly which is the right term. But let me know, bro, because I'm curious about who took it. Was it the bank, REO? Like, what was it? Yep, sure is, bro. Eminent domain. I see it. Eminent domain. Yep, that's right. That's how it happens, yo. I've seen that happen before, actually. Rare situation here, but it does happen. And the main reason is when you get away in the way of a utility. I know in New York, that's how it is. 'Cause I did real estate in New York for a little while. But that's how it works over there. or should I say over here? Well, I'm pretty sure it's the same in any state, right? Because if the government has a reason to take your property, they're probably going to exercise it because they can, right? And that's what it's about, honestly. And this is why we collectively, as the 330 million people that we are, or however many of us that are willing to, get right, because the other batch are clearly not even going to leave their apartment or house, so they don't matter anyway. Uh, we got to be the ones that make things right. This is what matters, right? What matters is what is right, not what some rando psycho wants. It's very important. Uh, all right, I think we're clear now. All right, let me just answer this. Is it possible for banks to block us in the future from taking out cash for some made up BS reason? No. While they cannot stop you from taking out cash, they can force the exchanges to stop you some way, somehow, with some petty rule. That's what they can do. But they cannot do what happened in Canada. No, because that's a blatant breach of your Fourth Amendment rights, as well as your First Amendment rights, as well as your Second Amendment, as well as your Third. So, important to know these things. If I don't remember correctly, it might even be your, yep, no, just, it might even be your fifth, actually, right? Because cash is really your fifth. Because when you're stuck having to use something digital, you lose that right. People don't even realize this. Write that down, because that's true. Because if you swipe your card somewhere where you don't want it to be swiped, or you don't want a record of that transaction to be logged, guess what? It's happening whether you like it or not. And that's everywhere across this planet. Period. So it's very important to understand that. Let's see. Funny. Uh, ah, so funny. All right. So we'll keep moving. No problem, brother. No problem. So back to these rates. So as you guys can see, it pretty much stayed flat, right? Through February 73. I mean, we started at 7.33 in August, April 2nd, right? 71. Let me go back at 733. So come 2 years forward, March 23rd, we're really still at the same spot, 745, right? So let's see what happens if we get to April. April 6th, where are we? 7.5. Not even a whole 0.2%. If you're trying to defend your rights as a person, a human being, you use your Bill of Rights. Amendments of the Constitution are completely separate from that. That is correct. That's an add-on. They're literally amendments to the, not in the, actually. Very common misconception because they teach us these things incorrectly. And that's very important. For whoever that is crying about the price in the chat, you should go look at the rest of the market. The whole market is down. So if you're mad about one coin, you should go buy something else that's about to drop 50% because this here is already done. So stop crying because I don't give a fuck. If you was paying attention, your ass would be staked and you wouldn't be saying shit. So nobody cares about your crying about buying over 42 cents because the whole objective of this coin is to freaking stake it so that you're earning yield. So if you missed that part of the instruction, that is your own fault, not anybody else's. Enjoy. So back to this. So you guys see, not even a whole 0.2% 2 years later, after we went from the start of this chart to this point in time. Now let's see what it looks like on August 15th or after that date, the first date after that date. August 20th, 7.71. Now, what's interesting to note is that the market seemed to know at the time that this was going to happen. Pretty simple. Markets typically do not go up into the news anymore. I mean, let me rephrase. Markets typically do not trade into the news anymore. They typically react to the news. I don't know if you guys have noticed that. That's one of those new phenomenon that's happened from bots having HFTs and just all these algos in the system. Because what happens now is that these systems are reading words and text. And those algos are being triggered, those bots are being triggered by those words. So that's how that's happening. That's the difference. That's a major difference. Because if you guys will see it at the beginning of the chart, because you'll see how the volatility is just basically nil here. It's all kind of smooth, right? Like the price is just going how it's going. Nothing basically happened between these recessions until it started skyrocketing after the oil embargo in 78. Right? Kind of like what's happening now, actually. Interestingly enough. Excuse me, guys. But yeah, this is what it's about, right? Cost of capital went up because the cost of reality went up. And that's what's happening now. Exactly the same thing. Only this time it's going to be worse because this is the end of the system. This was really the beginning of theirs. And this had to happen because guess what they had to do? They had to distribute these dollars. On top of that, you had all these baby boomers, kids coming into the workforce. Biggest population ever at that time was the baby boomers. They clearly had the biggest cohort of people entering the workforce thereafter. So this was also a big reason for the inflation at the time. Because when the baby boomers come back, when they come back, 60s. No, I'm sorry, I'm thinking about Vietnam, excuse me. They came back after 45. They had kids in the 50s. Kids went to freaking Vietnam if they were born early enough. Because Vietnam, excuse me, ended in what, 75 or 72? I can't remember exactly when it ended. Let me check again. Excuse me, guys. 25. There we go. Yeah. So, hold on, because I hate when that happens. So, Vietnam ended in 75. All right, here we go. Let me get this back up and out. All right, let me get this back up and out some more. Let's go out to 90. Yeah, pretty good. All right. So yeah, inflation. Combination of USD being swapped out for trash in conjunction with largest cohort of people entering the workforce in history. So bad timing on their part, right? What happened? Central bank, the U.S. came in. You had some central bank. I can't remember his name before. Paul Volcker, which is the guy that's famously known for crushing the inflation of the time. Um, and guess what? Ever since that point in time, it's pretty much been a one-way train. Oh my gosh! I just happened to look up, and this is probably the funniest, probably the second funniest message I've seen today. Yes, yes, it's still possible. Yes, just please do yourself the favor if you're really upset and not just some troll, and learn about dollar cost averaging. In fact, let's stop everything right here, just because this is just crazy to me. Oh my god, I need to light up. Hold on. Dollar cost averaging. What is that? Dollar cost average is an investment strategy that aims to apply value investing principles to regular investment. Now, what does that mean? Well, what that means is the guy that wrote this book, Benjamin Graham, The Intelligent Investor, means simply that the practitioner invests in common stocks with the same number of dollars each month or each quarter. That's it. Nothing else. Yeah, this is the first real crypto. This is the only really crypto that exists out there. Monero is probably the second one. I mean, it just doesn't trade through a centralized exchange like everything else. So that's why we call it a crypto. But they still play with the code over there, so be careful because that thing is it's a little funky, right? So just understand the difference between a complete crypto and Hex. Hex is complete. It's a finished product, and this is why 50 cents and beyond is possible, right? Now, the important thing for you to understand is dollar cost averaging and what it means. And all that means is that you're buying with a fixed amount of fiat on a recurring basis. That's it. Whether it's weekly, every 2 weeks, every 3 weeks, every month, every quarter, every year, whatever it is, that's what you do. And that's all dollar cost averaging is. So you don't actually have to worry about the price because in these types of markets that are laden by fiat, you're going to always have ups and downs. That's the name of the game. That's literally how markets work. And there's nothing anybody can do about it. Period. The only thing we can really do is move out of fiat and into crypto strictly and nothing else. That's it. So this is what's going on. Well, hot dog. Uh, Let me see something, guys. I think I'm wrong. Okay. Yeah, nobody uses this crap anyway, so nobody cares, bro. It's cool. Back to this. Let me close that because it's bothering me now. But I shouldn't have done that because I'm gonna have to close it again. Okay, looks like it went away. Let's expand this bad boy. Yes, I'm winning. All right. So back to this work. So biggest cohort, oil embargo, new currency, paper money, all added to this happening. Paul Volcker came in, crushed inflation, and has been a one-way trend ever since. Now we're gonna slide this chart over to the 80s to take a look. God damn it. Sorry about that, guys, but this gets very frustrating sometimes. Usually just blasting my music. Don't gotta hear this crap. Anyways, so this has basically been the trend since then. And Tanya, I hope that really answers your question because that's a solution to the problem that you have. Because this is what it's about. Dollar cost averaging. Because you can't determine what they are going to do with their system because it's not our money. This is our money, though. That is not our money. This is our money. What we have to do is understand that their money is fake and that it is the problem. Because what they're doing right now is setting up the curve so that they can get in. You need to catch my last stream. And after you catch that one, because it's a short one, watch my first one. And then the second, third, fourth, fifth, and sixth. Learn. That's how you get paid. Not because you just bought something. That's not how it works. Go watch some. So check this out. Interest rates have been going one way since the 80s. Why? That's the question you got to ask yourself. Why? Why has it been one way since the 80s? What are you getting from that? What's been happening? Why is this beneficial to you? Well, it's really not. Because look at what happens. What you're looking at in this chart is literal admission of guilt by central banks. Because each gray bar highlights a recession. Okay? Now, what do you see after each recession? Spike down in rates. Yeah, it's freaking retarded out here, man. It's retarded out here. You hear that? Can you guys hear that? It's just ridiculous, man. I mean, it's, yeah, exactly. Pretty much. Nah, I actually got my windows closed, bro. I actually got them closed. I think I need to get sandbags for these joints because it's getting crazy out here. Some egg cartons to push that shit elsewhere because it's getting wild. Woo. Anyways, so yeah, essentially they print more money, time and time and time and time again, and this is what it's been about. So in order to compensate for that fact in reality that nobody's been paying attention to, what they have to do is continuously lower rates. I mean, we were just at, what's the high? The recorded high for them is 1863 on October 9th, 1981. I'm gonna guess this is like a weekly or bi-weekly chart or something. I'm not really paying attention to that. Looks like a weekly chart. So October 9th, 1981, 1863. All right. 1863, 1981. Keep those numbers in your head. All right. What just happened? Well, I slid forward just 5 years from that point in time. And all of a sudden, the high for this time frame is what? 1158. 6 years later. 6 years and a week later. A whole 5% lower. Or excuse me, 7% lower. 7 whole% in 6 years. But what's happening during this time? Well, credit usage is expanding, of course. Well, hold on. What do you mean, Wells? Well, hold on. Let me get another chart for you. Because that's what it's all about. The data. And here's the thing, guys. The best part is that this is their data. This is what they're admitting to. I mean, it's kind of crazy when you think about it, but yeah, that's what's happening. What am I looking at? Credit. Let's see if that's the one I want. This is the one I want. Yes. Add that. Almost got me dancing. There we go. Come on. Bam! Well, bam! Now let's make this line log if possible. Let's see. Do we have that setting here? Oh, let's see. Does it actually? Oh, yeah. Yes. Now, I don't know if that looks better like that to you guys, but to me it looks better log. But maybe you like it better like that. Or maybe rate of change is better. Let's do an edit. And let's look at, let's see what this looks like. Looks just like that. I don't really care for that. I want you guys to see the impact of what these clowns are doing. Now, I hope this line makes some sense. because you got to really understand that it's all about rates of change. Now, the right side is the number we want to focus on. Percentage change from a year ago. So if you're looking at today, June 19th, 2022, and you go back to June 19th or June 20th, 2021, that's a year ago. So we're going to look through this and look at that percentage change through time and take into account what's actually happening in the economy via credit. Because guess what? Most people got a credit card. Most people live off credit today. Today. Hold on, guys. All right, I think I'm covered. So we go back early 70s, right? Now, remember, things got to swap first, right? They got to change first. And this one specifically for you, DB, pay attention. Now, before this point in time, there was no 30-year in the market. Isn't that interesting? But let's take a look at what's going on over here. Because over here, shit's happening. Now, what's happening exactly? Well, seems like in the late 60s, credit was being tossed around to some degree or another because you went from 63% year on year to 72, 76 and a half in 69. Then contraction. I can't remember exactly what happened during that time. I'd have to look it up. But credit contracts for a reason. It doesn't just happen. And that's my point. Hell, it's even highlighted gray. I wasn't even paying attention to that. So there you go. Something happened that year. I can't remember what it was. But we go back up, right? We shoot up. January 1971, 94% year on year. Revolving credit. Now, revolving credit is what everybody has access to in most cases. Your regular credit card, securitized or unsecuritized, basically is what that means. So it's either somebody gives you credit or you got to put your cash up to get that credit card. That's what that means. So rate of change is how much in percentage terms something is changing from one year to the next. Okay. So in 1971, we went up almost 2x. We almost multiplied the previous value of January 1970s inflation or revolving consumer credit. Imagine that. From one year to another, an economy just flips like that. That's kind of crazy. Now, this was actually happening in real time in the 70s, early 70s. Now, why is this happening? Well, ain't no real jobs really in America anymore already, for the most part, at this point in time, because they've been shipped overseas. Most of them been shipped overseas already at this point in time. The manufacturing economy is just shrinking and shrinking and shrinking from the 50s on forward. And it's just happening in mega clips up until the 2000s. And then it's pretty much gone altogether by then. Then we get a major drop all the way to what number is this? 12% a year later. Just 1 year later, we're only at 12% year on year. That's quite something, isn't it? Now, sorry guys, I didn't catch that one. I was too busy in the moment. Um, Now that's on top of the 100%, mind you. But the important thing is to grasp how that switch just collapsed the whole system to the point that it did not continue to grow because people needed credit. They needed it at that time. I mean, it's obvious when a recession came around the corner, just 1 year later, 2 years later, excuse me. Because January 1974, there's already a recession afoot per their records. That means it was already ongoing prior to that. So people needed this credit. So as you can see, credit is still growing somewhat because people always need credit. That's really because people are always trying to live beyond their means. Doesn't mean you got to, but it happens. But this is that flip of the switch. Because look at what comes next. 8%. All the way to, there we go, 126%. December 1977. Now, you guys got to realize the 30-year mortgage rate was this high then odds are that. Yeah. Sorry, guys. 127%. I mean, and it was stacking like crazy, right? I mean, let's see. 112% February 1997, and then all the way up to December. So that's 9 whole months of 100+% stack of revolving credit. Meaning people are literally just borrowing because they have to. And they didn't record that as a recession, but you better believe that's why they was borrowing. 70s was not a very bright economic period in America. It was not. That's not really discussed often, but it's really not. Uh, Anyways, these interest rates are the reason why. They just really kicked ass, right? I mean, imagine trying to buy a house. Now, what's the funny thing about that? At that time, that made sense. Because here's the interesting thing about money, it's math. So if you're holding dollars and you're getting 15% yield, well, you're going to be a happy camper, aren't you? At that time, that was as good as it got. Think about that. Because why else would yields be at zero? They're taking money from you or everyone, really. And most people don't even realize it. That's real. This is how they're taking money from us, keeping rates low. Because guess what? When there's nothing to pay, they get to keep little. Oh, I'm sorry, guys. I don't know what's up with that. All right, should be good now. So that's something you got to understand. When there's yield to earn, market adjusts. I've explained this for over a year and a half. So if there is no yield to be had, what incentive is there? I mean, this is what we're seeing here. We're talking about 5%. And this is for a mortgage rate. This is not what people are getting. This is for like the best. Right? This is the average. So you're either getting that or you're not. Most people are not getting this rate. Period. They're not. If you understand like normal distribution in economic, socioeconomic classes and whatnot, and how people really treat money and stuff like that, you know most people are not getting this rate. only people with pristine credit at this point in time, only people with pristine credit are getting this kind of rate. Period. So anyway, as you guys see, go through multiple recessions, right, from the 70s through early 80s to mid 80s. But at the time, credit is just popping off. Because here's the thing, guys. While this line is strictly mostly between 0 and 30, what you have to realize is that every dot adds up. So if we average this line up, it's probably somewhere down here. So credit use is probably a consistent 20% year over year add on. Probably more. I'm not doing the math. I'm just guesstimating here based on what I'm seeing at the chart, on the chart. So probably 20, 25. Right? But look at what happened after the 90s. After the 90s, the ability to obtain credit kind of died off like that. I don't know if you guys realize that or not, but try to think back if you're old enough to be able to like remember what the 90s were like. Things kind of died right here in terms of money. I remember that pretty distinctly. Things just changed. The whole thing just changed. Everything just changed. Everything. Everything changed at this point. Interestingly enough. Um, Let me see if I can get the damn number because I really want it. Killing it. Can't get it. I don't want to have to shrink, but guess I got to. What is this? 95. Let's go to 90. Okay. Bam. 24, 23. What is this? October 95, 23%. There you go. Revolving consumer credit hasn't been as high ever since. Looks like we're trying to get up there now, though. Not a good thing, guys. But that's how crazy things were in terms of consumerism in the 90s. Yeah, it shows how it seems like it, right? It's freaking crazy out here. Jesus. Oh, oh, hold on. All right. I think they're just gonna stroll on by, so I'll be able to start now. All right, let's see. Revolving consumer credit. Add it. Let's go credit again. Oh no, that line. Come on. Thank you. All right. Yeah. Let's make sure this line is percentage change from a year ago. Okay. This line also percentage change from a year ago. Quarterly is fine. And this is monthly. Let's just make it even. Hold on, guys. And period. All right. Let me format these bad boys. Right. All right. That's left. Okay. Wow, not the best looking chart. I do not like the way this looks. And I can't keep them on the same line because they don't make no damn sense. But left hand side, mortgage rate. Right hand side, revolving consumer credit. And then delinquency rate on credit card loans, all commercial banks. Now, why am I looking at credit card loans? I have no idea. Let's see what they actually are. Oh, and I fucked it up. Damn it. So now I got to add these again. Hold on. Alright, just haven't looked it up in a while. Loans. Let's see. Hold on, guys. Okay, I don't think I'm gonna find exactly what I'm looking for here. But if I were to guess, and I think I'm a pretty good guesser, I think what is meant by credit card loans, all commercial banks. Let's see. I think that this charge off value loans and leases removed from the books. I think these are let me see. Income, commercial banks. But what loans are they exactly? Let's see. But which loans, man? There's all types of loans. That's why I'm asking this question. Loans and leases. I mean, if they're just looking at the broad baked bucket, all right, I guess that's what they're doing here. Sometimes that's not what they're doing. Credit card loans. Oh, okay. Credit card loans. All right. So yeah, you can borrow against your credit card. Clearly not a smart thing to do, but yeah, you can do it. Percentage change, and people do it, as we have seen. All right, let me edit this other line, and we're back at it. Okay, I'm sorry about that, guys. I left that up there. Didn't mean to. Percentage change from a year ago. Let's make quarterly. And period. And then make these bad boys on the right. Right. All right. Oh, why? That's why it's doing that. Why the hell is it doing that? Probably because some other charts are there. Hold on. Let me see if I can make this stop at 0. Is that joint is pretty annoying. Is it really not going to let me do that? I guess I'd have to play with this. And you guys should not have to sit here and watch me do that. So, damn it, almost had it. Let's see if I can get these bastards over here. Nope, that didn't work. Great. All right. Sorry, guys. Bear with me. Try to make it quick. All right. So as guys can see, as interestingly enough, as the credit went up, delinquency rates went up. Not a coincidence. Same deal. However, higher, low, or shall I say lower, high. No pun intended. Oops, damn it. Just a bad chart. All right. But at the same time, the banks do what they have to do, right? That's what that point in the chart means. Because if you guys remember what 2008 and 9 were for, you wouldn't think these banks would be taking any risk ever again. Because they sure as hell haven't really been taking any. But here we are again. Right? And this directs us, this affects us directly. Directly. Very important stuff. Because look at what's happening now. I'm going to remove this line. We can see that the rate is crashing of delinquencies, right? Because people are taking on credit at rates not seen before. Now, I'm going to remove this green line, and I was going to do all that anyway, I think. Let me see. Yeah, I think I'm doing this. Hold on, guys. Let me add that line back. Because this is pretty important. Delinquents. What's going on here? So slow. Yeah. Here we go. Quarterly end period. Change right and done. All right. So let's zoom into the past 10 years or so. Now, mortgage rates skyrocketing. Delinquency rate on credit card loans skyrocketing. Now, let's add the other line. Because this one is really the shocker. And that's why we're taking a little extra time on this one. Percentage change from a year ago. And let's do quarterly end of period. Now, this is picking up from, let's see here. Come on. Q4 2020. Just tapped zero. And basically trampolined up to 3%. No, that can't be right. There we go. 7%. 7%, folks. In a market where people are doing what they have to do to work, they're no longer going to the work. Like, they're no longer like participating in this thing, right? Labor force participation rate. I mean, need I say more? Like, he was just left, and they ain't coming back. This line going down means people leaving, meaning they're not being counted in any of the economic data whatsoever that is released. None. And as you guys can see, since 2007, it's kind of been a one-way street. way 1 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 way Yo, I did not hear that. The fuck? I guess I gotta do some homework. I did not hear that, bro. Like that would be insane because that's literally the opposite of what their mandate is. Literally. So that strictly opens up the grounds for audit. Literally. If he says that in public, that's insane. That's insane. That's saying, yeah, we're trying to fail. I don't think they ever want to broadcast that message. So please, if you can find that link, brother, send me that because that's insane. Whoa, I can send that to somebody that will get that to the right people. So please send me that. If not, I'll be looking for it. All right. So labor force participation rate, one way street, folks, and that thing is going down. Now, what did I say about the 90s again? Oh, yeah. Well, it just so happened .com bubble pumped in one last time, and that was all she wrote. She ain't been the same since. Nope. Ain't been the same since. The top of society, basically, as we knew it. As we knew it. Now, this is with tech and all this nonsense, all these supersized companies that we know exist. Biggest companies ever, monetarily speaking. But yet, look at what's happening to our economy. Interesting, no? I say yes. Very. Because this is really what's happening. And people are just out here acting like it's not. It's kind of crazy. But yeah, it is. It's happening. So yeah, these are kind of the things that are happening out here that, you know, when you sit down and take a look and understand what's going on, like just look at these things sometimes, you'll be like, wow, this is crazy. Because yeah, it is. Now let me think. What else could we look at that's kind of crazy? Manufacturing. Let's look at this. Let's see how much data we got. Oh, well, they only show it from the 80s. Now let's see. Productivity and cost measures. So they're measuring the dollar value of these things. This is why it's up and to the right, guys. Let's see if it gives us anything here. Oh, no, did not. Damn, only 12, 20 years, 40 years of data. This is not enough. I know they got more than that. So let's see. Productivity. Come on. Jesus. Early. I'm just not going to do anything. Jesus Christ. All right. Productivity. Gotta type out the whole word now. All right. Don't do me like that. Damn, this is not gonna have all the data, and I just know it. This is crazy. 'Cause I don't know where all this data came from. That data wasn't there before, and nobody even asked for that. Who cares about that? Ridiculous. Let's see. This ain't 88. So total. Where's total at? Oh, come on. Oh, this is just prices. Damn it. All right. I guess they just don't have the data anymore. Because the price obviously is always going to be up and to the right. Explained that numerous times. Right. So nothing surprising here. Now let's take a look at the market, see what's going on. Okay, looks like Hex catching a little bit here. Be interesting to see people stop dumping billions of it at a time. We'll see. Bitcoin back on the reversal. Good times. So yeah, look, Bitcoin's got a long way to go because the whole market, as I've explained before, has used it. Right? Like you guys wanted institutions in the market. Well, this is what you get. Okay, pretty simple. Hold on, guys. Very important to understand that because that's what's going on. All these institutions now want in. So guess what? They're gonna make it cheap for themselves to get in. Pretty straightforward. Ha. This is funny. Huh. Good times. Oh, damn. That's crazy. Mm. Well, can't relate, guys. Cannot relate. Nope. Nope. No relation. See what this Euro USD is doing. Give this thing some depth. 1 day chart does a currency no justice. All right. So basically holding off for dear life here. We'll see if it bottoms out. If it bottoms out, it could be interesting, but I'm not so sure that it will. I mean, it's interesting. I mean, this is 13 days per candle. Okay. So that's about 2 weeks per bar. Now, if you look at the MACD, it's recovering a little bit, right? And you're seeing the trend lines or the moving averages actually seem like they're ready to cross over permanently. Question is, will they? Well, depends on this here candle. And as you guys can see, it has plenty of time left. So if that thing keeps going down, odds are this is gonna keep going down because that's gonna keep going up, and that's how capital flows. So don't shoot the messenger. It is what it is. But you know, markets go through cycles, and right now it's the down cycle because it's been happening. Now I told you guys they hyped it up all this time. I told you guys there's no way this was not the top because things do not get hyped like that by mainstream. Period. No, it's not bots. Bots don't dump hex like I'm saying. It's people that are just either idiots or nefarious sellers, right? Like people that don't know how to sell or are selling tons of hex on purpose. I mean, to be selling tons of hex down, tons of hex down here on purpose is kind of funny, but whatever. I'm not gonna divulge any information on that front, but yeah, sure. Yeah, bro. I mean, if you haven't heard me talk about it before, yeah, I'm bullish on it. So, so let me put it very simple to you guys. All right, because I don't want you guys asking me about every damn coin because I'm not gonna give you an answer on every coin. I don't care about talking about every coin. Um, if it's an actual cryptocurrency, meaning, and I mean by hex standards, okay, meaning it's done, completed, no admin keys, etc., then there's no reason not to be bullish on it. Like you guys should understand that. There's a reason we got something that's called the standard here because we know that if these coins are serving a purpose, they have some modicum of sensibility tied to them. They have a purpose. There's an incentive to use it. Like all these things matter. It's not just about the name. It's not about any of that. It's about does this thing work always? And if the answer is yes, then well, there you go. Let's see. We got a question or a comment. What's up? Unemployment in the years ahead as the central bank heights rates. Yeah, yeah. Sure. I mean, the funny thing about that is, why you mentioned that, is that people aren't really trying to work in the system anymore. I don't know if you people have noticed that, but that's something that I've noticed. I see a lot more people out here selling stuff than ever before. And I mean, since the 90s. And in New York, that was so common that it came to the point where they really started finding people. But guess what? Now they're forcing people to do it, and they're going to cause a ruckus trying to find people. They've already done it a couple times. It's going to keep happening. So good luck to them. Chair Powell said that may be worthwhile trade off. Oh, shit. Yo, they could definitely say that. Oh, interesting. I'm gonna have to, yeah, interesting. Thank you, thank you. I'm gonna go on ahead and dig that up. Mm-mm-mm. Interesting. Anyways, you guys can see Bitcoin ain't done. Ethereum definitely not done. I mean, come on, nah. We're gonna definitely see 800 even for sure. Bitcoin definitely not done. Let's put some time on this bad boy. Let's get rid of these things. It could be arching the chart. Yep. So let's see. 83, 84% dip, 87% dip, 76% dip. We are not even at 80% yet. What is 80% whales? Let's see. $13.7. Excuse me. So there you go. 13.7 is 80% from the high. So yeah, should be a good time. People do not like to be honest about how things work. And this is why you stake X. That's why you don't gotta worry about it when you stake X. This is very important. And a lot of people miss that lesson up the 200 plus X. Like they missed that part of the lesson. I don't know why, but that's an important part of the lesson. Like you should have staked your Hex. Stake it. There's no reason you're not earning 40% APY. Like you still working, you still making money, you still put money in a crypto, you should be staking your Hex long term. You should. I mean, nowadays we got other things to be playing liquid with, right? So treat those things as that portion of your portfolio and stake your damn Hex accordingly. That's what it's for. Build up your balance sheet. You're not gonna have a fortress if you don't have the proper balance sheet. That's a fact. There's a reason the U.S. has done what it's done. Think about it. There's literally data on the countries that own its debt. It's a contentious issue. That is a real thing. It's not, it's a contract. It's not something you can just ignore. Not when it's country to country. It's entity to entity. That's the correct way. Things you got to understand. So, as you guys can see, Bitcoin got a ways to go. Ethereum, for sure, got a ways to go. For sure. Yeah, let's put some time on this. It's broken a pretty important trend line, actually. Now that I look at it. Hmm. Let's be courteous, all right? Let's do it quote unquote the right way. Let's see what I consider the right way is. Oh, well, that's not good because it seems like that's what I did. Ouch. Well, can't say I didn't try. So yeah, pretty important trend line for Ethereum. Kind of sad that it's broken. Hmm. Not sure what's gonna happen here. It could be that we see 350 again. After all, I've seen people call that number. When a market loses its structure in such a way, these kinds of things do become possible. So, yeah, is that right? Nope. 740. All right. So yeah. All right. This is how I do TA actually. So when a pattern gets invalidated, well, you just gotta find the next one because that's just how this shit works. Um, the market just follows a series of patterns. It's really all it is. Because over time, well, what is it doing? Well, you see it on the chart up to the right. Because what is the dollar doing? Well, if you're not sure, let's show you. Down and to the right. It just so happens to be a problem at this point in time that it's up like it is. So they're going to try to stop that. Something to understand. So back to this. Yeah. When the market breaks structure like it has here, that spells problems. Now let's see what's going on with Hex in that regard, right? Because you can't just be talking about two unimportant markets and not looking at the important one. That'd be crazy. That would be insane. So let's see what we got going on here. Oh, got a whole lot. Hold on, guys. Let's get rid of all this. Don't need these. Don't need that. Don't need that. Don't need that. All right. Ah, that line isn't here. Hold on. So basically, this line stems back to the May highs, May 2020. Where is it? Oh, November 2020. But then this chart getting busy too. Hold on. Yeah, this is the problem with TA. Stuff gets busy. That's another reason why I'm not really a big fan of it. So this is November. So, ooish, ooish, ooish. Yeah, I don't really like that, but I guess volatility at that point makes sense. So let me explain something to you guys about TA. You gotta understand when the market is being volatile just by looking at the chart. Now, what does this mean? Um, well, simply put, the system was going through something at this point where it was just lulling down. If you guys remember, I remember this distinctly because it was very annoying to me. We had came close to 2 cents, breached it, and it kind of just died there. Um, and it just went sideways into a lull until it popped, and it popped for a long time when it did because it went from 0.13 cents. I think is the low 0.135. Yeah, 0.135 cents all the way to 50 cents from here. Pretty much almost 50x from that point. Now, that doesn't just happen, right? So you got to kind of think that volatility was occurring at this point to some degree or another. Markets don't just do that. So there's some type of underlying volatility going on here that gives the market that structure. Now, this box is just highlighting the down period. That's all these boxes are highlighting, just down and sideways periods of time. Oops. So let's see what other fancy connections we can make, since that's what it's all about. Oh, I'm sorry, I forgot. It's not even the right way. Okay, so let's go back here. So there you go. So as you guys can see, this peaked a little bit. That peaked a little bit. But again, there was volatility at both points, right? Price ran up into a wall, got sold down. Then it got bought up again to the point that it went all the way up to 50 cents. And this is kind of my point, right? This is something you gotta keep in mind. Like, TA is an art. It's not a science. It's not a science. People try to say it is, but it's not. It's really an art because you got to understand why price is doing what it's doing when it's doing it. Because people will look at this and say, "Oh, well, something bad happened. Hex is dead." No, it's not dead, man. It just did a 10,000x. What are you saying, right? So if you don't understand that, you're gonna say comments like that don't make any sense, right? Very important stuff. Because look at what Hex did. It went from two zeros and a two down here, big payday, all the way to 50 cent. What say you to that? Not much to say. But that's what actually happened. Oh, I'm sorry. That's not even big payday. That's pre-big payday. This is September low. Hint, hint. November low was higher. So you didn't even get to see this price level again. Never. Unless you was there for big payday and you caught that dip like Hexo, right? Like you didn't catch that. So important. But this is how we do our lines correctly if you're into technical analysis. Um, Now, it could be argued that you could even make your point from there. But I don't like that because that means that point is too new. It's not concrete enough. But we can give it substantiability by throwing it back here, right? Yeah, because it at least makes sense. Because you see price come into that level three times and then bust through it. That's why it's important. So there must be something going on this plane that we can't see. Because guess what? The market doesn't give you everything on a price chart. And this is why TA is a waste of time. You gotta just understand it for what it is and not give it much more merit than that. Because a lot of people spend a lot of time trying to drum up shit on charts. How do I know? Because I already did it. And that's why I don't do it. So there you go. Like, yeah, sure, you can figure out what's happening on a 15-minute basis. Good for you. Great, whatever. Daily, sure, whatever. At the end of the day, what's actually happening in the underlying reality of that ecosystem is what matters, right? And if you don't grasp that, then you're gonna get lost because this isn't legacy, right? Like everything that isn't just going up. So get that right. It's not quite the same. So let's see here. Let's look at what headlines are going on right now. All right, because this is a very important piece of painting the bigger picture, and then we'll wrap it up. Ha ha ha. Well, how does this happen? As you guys can see, this behind the paywall. Maybe I'll remember. I don't know. 160%. Now, how could it be that something that nobody is liable for, i.e., vaccine injuries, as we all know, and they're still paying? Well, guess what? It could be proven that this is not a vaccine. What? Yep. Imagine that. Whatever. Yeah, they're really going there, and I told you guys it was happening. So, yeah, Britain is talking mad tough. They're talking super tough. They think they're America now, so it's gonna be interesting to see what they do. Let's see. China's northeastern black soil grain field is alarmingly depleted. Yeah, good luck to China because they survive off of importing food. So let's see. You make your big money when central banks make a policy error like now. I wonder if he's in the actual right market. Interesting. But yes, I've been talking about it for 18 months, actually. So yeah. Yeah, about this. It's not trending on Twitter. It's trending for you. Check your settings. Yeah. Uh yeah, this is just ridiculous, right? Like this clearly is not people are not gonna let this stand. Like teaching people to hate each other is not a strategy. And that's all CRT is. Period. Freaking ridiculous. China, Russia, Japan. China and Japan cut US Treasury holdings and Federal Reserve hikes rates. Now, I talked about this literally minutes ago. This is about that treasury data that shows how much countries are holding. Let's see. U.S. Treasuries, lowest level in 12 years, declining dollar. I don't care about that. Oh, it doesn't show tick data. Damn. Yeah, but yeah. Okay, so I don't know if I've talked about this. Let me talk about what happens or what does it mean when a government official admits to being wrong. What does that mean? Do you guys know what that means? I mean, have you guys ever seen that where a public official ever admits that they're wrong? Let me get a yes or no if you've ever seen that in the chat because I know I have not. I, in my lifetime, have never seen that ever happen. Not from that crowd. Nope, not at all. So let me know if you are one of those magical people that have somehow seen that in the chat because I have not. This is crazy, right? So, yeah, didn't think so. Yeah, didn't think so. Yeah, I got ad block on my joint. I don't know what's going on. I don't know what's going on. I think maybe it's not. No, I gotta check it. Maybe it's not set up. Maybe I'm thinking of the wrong browser because I do have two. Um, let's see here. So they're not showing any tick data, but they're admitting that it's at least dropped. Oh, maybe it's here. But let's talk about this first. Janet Yellen now admits she was utterly wrong, right? So we all know public officials do not do this. So what are they setting themselves up for by doing that? Think about it, right? That doesn't happen, guys. That's a telltale sign right there. Those are the kinds of things that I catch like a freaking fly in a Venus flytrap. Like, no, no, you ain't sliding that one by me. Sorry. Don't think so, lady. Nice try. Better luck next time. You're the only person, man. Only in Canada. Only in Canada. That would not work here. Period. That's why they always lie. That would not work here, bro. No. So, as you guys might get it by now, yeah, they're gonna really make people pay for just being people, unfortunately. So, yeah, prepare. China, this is 4 days ago. China's holdings of U.S. Treasuries skate to 12-year low. Japan also cuts holdings. All right, let's see if we can get some tick data here. No. Let's see. Nope. Damn it. All right. I guess they just reference it. It's fine. Let's see if we can. Here we go. Not sure I would just look it up, but it's fine. Chinese holdings, yeah, they used to be, yeah, okay. So 1.003 trillion, down 36 billion from the previous month alone. So in case you don't understand what's happening, this is de-dollarization in real time. Because what happens? Well, it's like I explained earlier in the stream. Local currency, local interest rate. Yes? Yes. So if they're selling foreign currency to them and foreign interest rate, then odds are they're converting that cash either into, or I'm sorry, they're either converting that local foreign interest rate into foreign currency that's earning a yield because now rates are high, right? Or they're converting it back to local currency. Oh, come on. They got me. So I hate these damn ads. All right. So that's basically what's happening. And in May 2010, it was $847 billion or $844 billion. but it's gone above $1 trillion, and now it's looking like it's going to dip back below there. And that's back to 12 years ago at this point. So let's see, because you got to remember, rates were zero for the longest time, right? So now holding cash is okay because now there's a cash rate. There was not one before. But odds are they probably switched it back to their local currency anyway. Japan holdings fell. Also, probably odds are they changed it back to their local currency because now they could probably earn a yield on it, which is weird because their currency is crashing. But go figure. Maybe they're actually holding dollars here. I would assume that Japanese bank is actually holding dollars because they need all the help they can get. Them guys are hurting over there. I mean, I don't know, man. I don't know. It's just a weird situation that they got going on over there. But it's dumped, as you guys see. 7. Oops, that's yuan. Oh no, that's overall foreign. Excuse me. Fell 14 billion for Japan, and overall it fell. Wow, 1.5 billion or 150 billion month over month. Oh wait, no, sorry, I'm not reading this right. Overall foreign holdings of U.S. Treasury slid to 7,445, the lowest since April 2021 of 7.613. So just winding on down. Transactional basis, U.S. Treasury saw net foreign outflows, 1.15 billion in April, from a net new foreign inflows of 49 billion in March. So basically, the count into treasuries was up in March, and now this month is down. It's down 1 billion worth versus up 49 billion in March. And this was the first outflow since October 2021. Quite something. See if there's anything else down here really worth mentioning. Nah, just U.S. Interesting. U.S. corporate bonds. They posted an inflow of 23 billion on top of March's 33 billion, the largest since March 2021. Foreigners were net buyers of U.S. corporate bonds for 4 straight months. U.S. residents, meanwhile, decreased their holdings of long-term foreign securities. That's not bonds, so I don't care. Because people care about yield. They don't care about speculative investments. This is why stocks get sold off like that. Important to understand that very important difference. So there you go. People are selling their U.S. paper and not taking a price hit, right? Because if you're holding a U.S. Treasury, it's worth something in the market. It has a dollar worth, right? It has a fiat value worth. And yes, how about that? In a stunning blow, Macron loses absolute majority. It's far right, left surge. So basically, this guy's done. And as I've noted earlier in the stream, they lost. This is just more evidence of that. Once again, I mean, to the point that he's got 50,000 eyes versus 32,000 here, whatever this happened, and 2,000, 13,000, 45,000, 44, 55. So this one's pretty important, whatever. U.S. may act against airlines over cancellations. This is such a joke. They're gonna really try to stop people from flying by what? Like punishing these airlines for not having enough people because you morons did what you did. Like, it's a complete joke. Get out of here. Anyway, so you guys can see this guy's out. Oh, this is ridiculous. Yeah, so we will pay once a year to eat lunch with Warren Buffett, and the money goes to charity. So people's eyes is fine, but there you go. Let's see. I don't know what that is. Democracy is a state. Oh yeah. Imagine Hillary talking about democracy being at stake. And here's something cool, in case you didn't know. America is not a democratic country. It's a constitutional republic. Period. Let's see. Oh yeah, this guy's a moron, so he's getting what he deserves. Okay, whatever. So yeah, that's good enough. This is ridiculous, right? I mean, I don't even think I need to discuss that. We've been over that stuff for so long. We're kind of get what's going on there. History is not on the side of crypto's grave dancers via Simon Black of sovereignman.com. An interesting fellow. Not sure how well versed he is in markets, crypto markets. I don't know if he's like a Bitcoin maxi or not. So we're about to find out. Let's see. I would not surmise him to be personally, given what I've read from the guy, but I could be wrong. Let's see. Well, doesn't seem to. Okay. So far, it doesn't seem to be lauding strictly Bitcoin, so that's a positive sign. Cryptocurrency latest technology go through the boom bust cycle. Crypto has Oh yeah, Bill Gates is definitely out there talking about crypto is a scam and that it's gonna go to zero and all this stuff. So all his homies are buying basically. So that's what's going on there. That's funny. I didn't know. This is cool. 453 declarations of death of Bitcoin since 2010. That's a cool thing. I didn't know that. We should get something like that for Hex. Oh man, that's funny. If history is any guide, this is pretty foolish. All right. There'll be plenty of crypto businesses and many tokens themselves. Boom. Not a Bitcoin maxi, just like I thought. So I'm good. Long story short, history is almost invariably on the side of innovation. And there's still an abundance of innovation in crypto. And as we know, that's a fact. We see it daily on our side of the line because people think crypto is Bitcoin. And that's not the case. So, yeah. As you guys can see, things are looking up for us because we do real cryptocurrency over here. We don't do none of that funny stuff. We just keep it 100, right? We don't play any funny games, and we get our money's worth, right? We dollar cost average and we stake. That's it. Not much more to it, guys. The system is so young that is the move. And that's important to understand. Because that is how you're going to find success in the long term. Success doesn't happen overnight. We wish it did, but unfortunately, that's not always a guarantee. And this is why we play the long game. I know I do. So that's what I like to highlight at all times. I always talk about staking for the max. Nothing else. You want to keep liquid? You keep liquid. What you do with your money is your business. It's not anybody else's business. But point is, take care of your business. Make sure your financials are in order. Make sure your dollar cost averaging. Make sure you're staking and playing the long game. Because that is how you win. No doubt about it. You guys have a good rest of your Sunday. Thank you for joining me. It's been real. Peace. Right? The reality is that I want to be rich as fuck. There's only one way to be rich as fuck. That's by sitting on your ass the longest. Yep. That's it. Yep. That's the secret. The Godwell told you. Richard done told you. I done told you. Kareem done told you. Maddie done told you. Everybody done told you. Everybody done told you. Shit, motherfuckers still acting like they don't know. Appreciate that.
Yeah.
I appreciate that.
100% safe. There's plenty of games left.
Valiant done told you.
Yo, everybody said it. Man, hey, you know what it is, man? Everybody that told you. Y'all deep, everybody.